All right, guys. Welcome to another training. My name is Chooks Anyanwu. I'm your chief instructor of Zenko Forest Trading Academy. I just want to do this video for my students who have been asking me to do a video on how to use the Fibonacci retracement tool. Okay, guys, just a brief background. Fibonacci retracement tool is one of the technical indicators, that we use in forex trading or generally currency trading. The tool it's uh, contains a number of a series of numbers that are used, to gauge the level of retracement of price in the market. Okay, what I mean is that we use the Fibonacci retracement to gauge how deep a retracement will go if that retracement starts. Okay, and now the reason why we need to know how the reason why we need to know how to use the Fibonacci retracement tool is because for every trader, the retracement levels, okay, at the beginning of the impulsive move. Okay, so at the beginning of the impulsive move is where you look forward to taking a trade or to entering a trade. That's why it is important for you to know where the retracement will end and where the impulsive move will begin. So these are just the most important things you need to know about the Fibonacci retracement tool. So without much ado, I'm going to go straight to the screen and show you guys how we use this tool to trade. Okay. So first of all, I'm going to use this training is going to base off from we're going to use Trading View. Okay. And maybe for those of you who don't know how to use Trading View, it's a very simple application. Just go to tradingview.com and open a free account so that you'll be able to know how to use the technical indicator. Okay. All right. So how do we start here? Now, Fibonacci retracement tool is a free available technical indicator in all the trading applications. Okay. For Trading View, if you come to the left hand side, you're going to see the tool here. Okay. So what you do is that you just grab it and apply it to the tool. But before we go to that particular demonstration, I'm going to show us what exactly um, uh, retracement means. Okay, what exactly retracement means. So, guys, if you've been my student, you know this. So, if price is moving, okay, this is the impulsive move. Okay, the second phase of movement of price is called the retracement move, and that is the pullback. Okay, then from here, another impulsive move begins. All right. In this case, we're looking at an uptrend. Okay. So this is how the market moves. Okay. Excuse me. This is how price moves. Price will first of all take the impulsive move up. Then after this impulsive move, the next move is the retracement of the or the pullback of price. Okay. So now this pullback of price is what you need the Fibonacci retracement tool for. You need the retracement tool to be able to gauge how far this retracement will go. You need to know the depth of the retracement. That is very, very important. What is the depth of this retracement? Okay. The only thing that can show you this is what is the Fibonacci retracement tools. All right. The Fibonacci retracement tool will show you this depth. Okay. It will show you this major depth to which how far price can retrace into a structure, okay, into structure levels. First of all, it's important for you to know that the Fibonacci retracement levels are structure levels. They are areas of interest in your trade. Okay. So price will oftentimes retrace back into the Fibonacci numbers. Okay. And the two important numbers that we use in that will configure our the retracement tool to show are the 50% levels and 61.8 levels. Okay, so I'm going to show you guys this practically, so don't worry. I'm going to show you practically how this is done. Okay, so how then do you draw the Fibonacci retracement tool? First of all, you need to know Now, if this is a swing level, okay, if this is swing level, okay, all right, so you need to know how to draw the Fibonacci retracement tool, okay? So you have to draw, if in an uptrend, you have to draw the Fibonacci retracement tool from the recent swing low to the recent swing high, okay? So what that means is that you place your Fibonacci retracement tools from here, okay? You place it from here. I used to say that you take it up from here and drag it up to the next swing high, okay? And when you drag it up to the next swing high, which is this level, okay, you will see that the Fibonacci retracement tool will now plot these two levels for you. There are other levels, guys. There are other levels, okay? But the two most important levels that traders use are the 61.8 Fibonacci level and the 50% level. Please note that the 50% level is not a Fibonacci level. However, it is a level in between two Fibonacci levels, okay? And psychologically speaking, traders have taken these levels as as levels that that are self-fulfilling. Okay, the traders have taken these levels to be levels that are self-fulfilling. What do I mean? That is to say that you know, oftentimes traders pay attention to these levels. Okay, they pay attention to this level, so they are like self-fulfilling prophecy that when price retraces into those levels, that that price is going to what is going to experience some level of reaction, okay, either as a support or as a resistance, Fibonacci level, okay. So, but let me make this clear, guys. If it is in an uptrend, the Fibonacci levels will be acting as support to price, okay. Then, if it is in a downtrend, the Fibonacci levels will be acting as resistance to price, and I'll tell you what I mean, okay. So for a downtrend, let's look at for a downtrend, okay? Market is coming down like this, okay? It has to retrace back, okay? Now, how far this retracement will go is what the Fibonacci retracement tool will help you to determine, okay? So the Fibonacci retracement tool will help you to determine this depth of retracement, okay? Excuse me. The Fibonacci retracement will enable you to determine this depth of retracement, okay? So if market is coming down here from this point down here in a downtrend, and the retracement move is beginning from here, okay? The end of the retracement move is what the Fibonacci retracement tool will enable you to know, okay? The Fibonacci retracement tool will show you the depth of that retracement, how far the retracement will go. All right. So now, how to plot the retracement Fibonacci retracement move in a downtrend is for you to take your Fibonacci retracement tool, okay, from the recent swing high to the recent swing low to identify how deep the retracement will go. Okay. So what that means is that your retracement, your retracement tool will start from here, this level, that is the recent swing high, okay, to the recent swing low, okay. So when you drag it from here, let me create another line. When you drag it from this point to this point, okay, this is the recent swing high to the next recent swing low. It will now plot this level for you, okay, to plot two important levels for you, okay. That is the Fibonacci 50 level and the Fibonacci 61.8 level. These are the two levels that I pay attention to as a trader. Okay, the 61.8 Fibonacci, the 61.8% Fibonacci level is what we call the Fibonacci golden ratio. Okay, the Fibonacci golden ratio. Okay, so guys, I've shown you two scenarios of how you can apply the Fibonacci retracement tool to your trade. Okay, I've given you the uptrend scenario and I've showed you the downtrend scenario. Let me just recap this briefly. Okay, so let's say market is moving in this direction. Okay, now you now met price at this level. Okay, and that's after the impulsive move, after there's an extended move to the upside. In this case, we're looking at an uptrend, and you notice that price has started retracing. Let's say you saw the retracement somewhere here. You notice that the market has made an impulsive move to the upside and it has started retracing. That is usually the case. Price will make the impulsive move and it will retrace. Okay, what we call correction. After the impulsive move phase, you see the corrective move or the retracement move phase. That is how market move. Price does not move in one straight line. Okay, it must move in this zigzag pattern. Okay, and that's why it is important for us to know how to use this Fibonacci retracement tool, because it will help you to determine the depth of the retracement. Okay, so in an uptrend, you measure your Fibonacci retracement from the recent swing low to the recent swing high, and it will plot these two levels for you, 50% and 61.8% Fibonacci levels. Okay, so that tells you that at the time you met price at this level, let's say by the time you came, you met price at this level. Okay, you met price at this level. Okay, now this may not be the end of the retracement. Perhaps the price is still going to retrace deeper down below the level. Okay, so the retracement, Fibonacci retracement tool, will show you the depth, the probable depth of this retracement. Okay, and oftentimes it is usually correct, because all traders have taken these levels as self-fulfilling prophecies that if price retrace up to this level in the market, that it will reverse to the upside. I'm not going to teach us the entry strategies for using Fibonacci retracement tool. The purpose of this video is just to teach us guys how to use the tool. Okay, how to use this. So let's go to the market now and look at practical examples. Okay, so guys, let's say this market is in an uptrend at this phase, okay, isn't it? You can see the market is making series of higher lows, higher highs, higher low, higher highs, higher low, and this is clearly an uptrend. So here, the market started what? Started retracing down, okay? Started dropping, okay, and creating lower highs and lower lows, okay? So what that means is that this is the retracement phase of this market, okay, and this is the impulsive phase of this market. So this is how the market has moved from here to here and back here. Okay, all right, and back here. Okay, that's from here to here. Okay, so guys, this is how this market has moved. Okay, so what that means is that, let me redraw this from here to here. Okay, so guys, what that means is that this is the depth of the retracement. Okay, the market has made an impulsive move to the upside. Forget about this middle swings. Okay, this middle waves. Okay, I just want to use a straight line to show you an impulsive move. There are intermediate impulsive move up here, but I don't want to waste our time about it. So it is from here to here, from here to here, from here to here, then from here up here, down here, up here, down here, up here, down here, just like that. But you can use a straight line, okay, just to represent these other little waves. Okay, all right, so guys, now the Fibonacci retracement tool, how are you going to draw it? You draw it from this. This is the recent swing low, okay, to the recent swing high. It will show you the depth of the retracement that the price is going to make ultimately when it is retracing. So guys, let me show you practically what that means. So let's remove this and let's remove these lines, okay? Let me remove this line. So I'll grab my retracement tool. This is the retracement tool. Just click it, okay? Left click here, okay, and drag it up to this level here, okay, then extend it to the right hand side, okay, and click the tool. It will now permanent it there, so you can see that indeed market retrace into the Fibonacci levels, okay, the 38.2 and the 50% Fibonacci levels, okay? So price actually retraced in between these two levels, okay? So this has plotted the Fibonacci level. This 38.2 is important to, is a good level. Some traders use it, okay? I personally, I don't use it. If I don't get, okay, if I don't get exactly what I want, okay, I can extend this level, okay? I can extend this level here, okay, up to this level, okay? Now, what do you mean? You see, it is important to know that you don't have to take it too far away from the high. Choose the most recent low that is closer to the high. Okay, choose a low that is not too close to the high, okay, or the next immediate low before the recent one, okay. I think it's better that way. That way, you will see price will push into it. Let's say if you extend this Fibonacci to this low here, you see that you can still get, oh, sorry, this low here is the, I think is the best level. This low here to this recent high here, okay. So you can see that price is retracing into the Fibonacci into the Fibonacci 50% and in between 50 and 61.8 Fibonacci levels, okay? So this is how to use it, okay? It will help you to gauge the depth of the retracement, okay? Guys, this tool is very, very powerful if you know how to use it. Only use it when the market is uptrending or trending, sorry. When the market is trending, either uptrend or downtrend, pull out your Fibonacci retracement tool. It will show you where to look for entries, okay? So when you draw your Fibonacci retracement tool, you now wait for price to drop into the levels and you look for an opportunity, okay? If price drop into the 50% level, you look for an opportunity, okay? Sometimes the level plays out very well. The 50 plays out very well. The golden ratio as well plays out very, very well. They provide support for price action in an uptrend, okay? So let's look at a downtrend scenario, okay? Let's look at a downtrend scenario, all right? So this is a beautiful, let's look out for a downtrend scenario and where the market is pulling back, okay? Okay, so let's look for a downtrend scenario. Let's hope that this market will give us an example, okay? All right, so let's look at this one here, okay? See, the market is pulling down, dropping here, and it's retracing back, okay? So if, for example, you met the price here, okay, and you know that this retracement is still going to continue because oftentimes retracements go deep, okay? So the Fibonacci retracement tool will give us the depth of this retracement. So if you grab your retracement tool from this level down to this swing low and you extend it to the right hand side, okay, and you click, okay, you can see how price retrace into the 50% Fibonacci level and pull back, retrace into it and pull back, okay. Okay, so that's another example. Let's look at another uptrend example, okay. Okay, let's look at this. This is an uptrend, okay, and this is a pullback, all right. So you can see how price pulled back here, retraced to this depth and continued uptrend. So if you want to know how far this retracement will go, you grab your retracement tool, select the recent low, okay, not too far away from the high. So I will choose here, okay, up to this high here. I'll take it to the right hand side, okay. I'll take it to the right hand side, okay. All right, guys, and you click, okay. Now you can see how price retraced deep into Fibonacci 61.8%, okay, level, okay. That's a very perfect example here, okay. All right, so guys, you can go on and check. You see exactly what I'm teaching you is actually what happened. So let's look at this impulsive move and this retracement, okay. So let's grab the Fibonacci retracement tool from this swing low to this swing high, okay. Take it to the right hand side. You see how price, okay, retrace into the 61.8 Fibonacci levels, okay. See how this level is acting as support for price action, okay. So guys, you can go on and on. Let's look at another downtrend example. Let's look at another downtrend example, okay. Price is coming down from here and it's retracing back. What is the depth of the retracement? Fibonacci retracement will give you from this level, okay, down to this level. Okay, you see how price retraced into 61.8 Fibonacci level. Okay, so guys, that is all we have about this topic. Okay, bye bye and do have a blessed day. Thank you. Bye.